Late on Wednesday afternoon, the price of Bitcoin dropped below $16,000 for the first time since the COVID-19 epidemic, when cryptocurrencies became widely accepted. This is the worst day of the year for the token. The failure of FTX, one of the world's fastest-growing cryptocurrency exchanges, has shaken the whole crypto market, not just Bitcoin. Binance said it would buy FTX after hearing that it had an unexpected liquidity crisis. But Binance said late Wednesday that after doing its corporate due diligence, it would not go through with the deal. After the statement, Bitcoin went down, even more, falling to around $15,000. Bitcoin traded around $19,000 for most of October. Right before the end of the month, it went back up to $20,000. It was stable until the FTX Binance scandal broke out, which caused cryptocurrency traders to rush to their bank accounts in a panic. Aside from the current meltdown, macroeconomic challenges have kept Bitcoin and the cryptocurrency market down all year. Since hitting its all-time high in November last year, Bitcoin's value has dropped by more than 70%. Since December 25, 2021, Bitcoin has not risen above $50,000. Even with the ups and downs, the price of Bitcoin has dropped by almost 70% since November 10, when it hit an all-time high of over $68,000. This is because of rising inflation, a slow recovery in the job market, and the Fed's repeated signals that it would start cutting back on emergency measures to help the economy. Bitcoin entered 2022 on a relatively high note despite a poor start to the year. The recent downward trend followed a robust November and early December. After starting the year in the range of $30,000 to $40,000, Bitcoin went up throughout the year. On November 10, it broke its previous record by exceeding the $68,000 mark. Many analysts still believe that Bitcoin's price will eventually rise above $100,000 despite drastically declining from its most recent all-time high. They say it is simply a matter of when, not if. When Ethereum's price surpassed $4,850 in November, it set a new all-time high, following the most recent all-time high for Bitcoin. Since the last high, Ethereum has been just as volatile as before. In April 2021, when it exceeded $60,000, Bitcoin hit its first annual high. Since then, the price has changed significantly, which shows how unpredictable cryptocurrencies are at a time when more and more people want to join the market. Between its lowest point in July, when it fell below $30,000, and its most recent high point in November, it went through many wild ups and downs. Experts say that cryptocurrencies will become more volatile, but this is to be expected. We've talked to financial and investing experts who say that this is exactly why you shouldn't put much of your money in this asset class. They work with clients to ensure that risky cryptocurrency investments don't get in the way of other important financial goals, like saving money for emergencies or paying off high-interest debt. What do investors in cryptocurrencies need to know about this price drop? People who use the buy and hold method to invest in cryptocurrencies over the long term should expect price changes. Humphrey Yang, the personal finance expert at Humphrey Talks, doesn't think big dips are anything to worry too much about. He doesn't look at his accounts when the market is falling erratically. Yang says, "I've also been through the 2017 cycle," referring to the crypto crash of 2017 in which the value of many important cryptocurrencies, including Bitcoin, fell significantly. "I know how unstable these things are. Some days, they can drop by 80%. Experts say you shouldn't have more than 5% of your portfolio in Bitcoin. If you've already done that, Bill Noble, the chief technical analyst at Token Metrics, an analytics company for cryptocurrencies, says you shouldn't worry about the changes because they will keep happening. Noble says that volatility has been around since the beginning of time and isn't going anywhere. It's something you have to deal with. Yang says to use the same strategy that works for all long-term investments. Set it and forget it, as long as your crypto investments don't get in the way of your other financial goals and you've only invested what you're willing to lose. If this sudden loss worries you, you may have too much riding on your cryptocurrency assets. Don't invest money you can't afford to lose. Don't act too quickly or change your strategy too much, especially if the drop makes you rethink allocating your crypto. Think about what you would feel more comfortable doing in the future, such as putting less of your money into cryptocurrencies or spreading it out through blockchain-focused companies and funds instead of buying cryptocurrencies directly. Stop looking up. That's the best thing you can do. Yang says that if you let your feelings take over, you might sell at the wrong time or make bad decisions. If you haven't invested in cryptocurrency yet, what should you do? Even though some experts think that cryptocurrencies are too different from traditional investments to be compared to them in the past, Yang's way of investing in cryptocurrencies is the same as how he invests in the stock market. Because of this, Azhira Nelson of Savvy Girl Money avoids them. Nelson said that she often invests in low-cost index funds because, "I can see the history of that." She worries about these wild swings because cryptocurrencies are new and don't have enough data to track. If you want to invest and buy on a dip, you should know that changes are normal and that you can expect more of the same in the future. Even if you invest now, when prices are still low, you should be ready for them to drop much more. Reiterate, only invest what you can afford to lose after you've taken care of other financial goals, like emergency savings and more traditional retirement plans. Why did the most recent drop in Bitcoin happen? Many investors think it's normal that the price of Bitcoin goes up and down. However, Noble says that volatility is hard for regular investors. Like Yang, he says not to sell something quickly. Recent price swings show how volatile crypto has become. At the same time, big macroeconomic changes seem to have less effect on this volatility lately. Still, it doesn't take much to cause big price changes in a market as new and untested as cryptocurrencies. Noble says that even though changes are expected, some recent big drops have surprised him. "I thought that these things would happen less often and less often as the market got older." He says, "Boy, was I wrong." He compares the decline to the 1987 stock market catastrophe, after which the markets did not fully recover for several months. Noble says that a faster recovery may be on the way because cryptocurrency moves much faster than stocks did in the 1980s. Noble tells you not to panic and throw up. If you try to deal with the volatility and keep your positions small. If you enjoyed this video, don't forget to subscribe to our channel.